Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, the 21st of May. We've got a slight retracement actually in some of the risk positive moves we've had playing out over the past few days. Again, it seems as though that that President Trump wading in, trying to deflect the blame actually on the US's like significant numbers in terms of COVID-19, in terms of cases and deaths, and how he's responded to that, and he's trying to deflect the blame on China, it seems, and sort of again he's sort of with a view towards his presidential election, I think in November 2020, so less than 6 months away now. He's sort of trying to play up into that sort of that crowd there. So it's a really situation that once more the sheen has been taken off the rally. S&P 500 closed again with a breakout, nice strong breakout actually yesterday, but futures have sort of ticked back lower again, unable to sort of hold that traction. Although we still continue to see corrective moves bought into ultimately, but it's just that once more, President Trump finds a way to just sort of put a fly in the ointment, really, of these moves. We've seen that the dollar has started to regain a little bit of lost ground. We've seen dollar index just ticking higher today. We've seen treasury yields coming lower. So a slight air of risk aversion. Nothing too significant, though. I mean, in the context of, obviously, recent moves, 1% lower on the DAX is fairly okay, really. In FTSE 100, 0.7%. Futures, 0.6% in the States, lower. But just a little bit of a risk negative stance there as the dollar has regained ground across the board. This euro continues to perform well, though, I might add. The other key move is that oil continues to rally. What a sharp and impressive recovery we've seen in recent weeks. Certainly this one on Brent crude as well, from a low of $16 is now $36 and change. So really is coming up higher. A really strong move recovery that we've got on this oil price, and it's now testing these old April highs. So this is a really key moment for how the oil price goes. But certainly with regards to WTI, those that surprise inventory drawdown on the EIA stocks was really important yesterday. That helped to pull oil higher again, and it just continues to go. So it's a really impressive rally that we've got. But broadly speaking, other than that, everything is sort of lower against the dollar, gold, silver as well included. So in terms of where we're at data points today, well, we've got the flash PMIs as the focus today. These flash numbers have come out this morning and been better than expected, actually. Eurozone flash PMIs across the board better than expected, 30.5, well above the 13.6 level of last month on the composite. But UK also better than expected, 27.8. So these economies seem to be sort of starting to bottom out a little bit in terms of their expectations moving forward, which is good. Obviously going forward as well. This afternoon we've got the weekly jobless numbers. 2.4 million jobless claims is the expectation there, and this is sort of down obviously from where we've been in recent weeks. 2.9 3 million really last week, so we're still continuing to fall away, although adding 2.4 million jobs to jobless claims or effectively unemployed people to that list is just continuing to expand. Obviously 20 million on the payrolls data last month was a real worry that the unemployment level just continues to soar. Furthermore, this afternoon we're looking out for US flash PMI, which is 245, and is expected to just slightly improve, I would say. Nothing too drastic in terms of the improvement, but the the Eurozone and UK data has positively surprised, so I'd be watching out for that today. So that takes me on to my chart of the day, which is Euro-Yen. Now, we've talked previously about the strength of the euro and the euro recovering. Well, this really is continuing to go, and how euro yen has turned around in the last week and a half is incredible. That the last four sessions, actually three close sessions today, since that announcement that Germany and France were going to be pushing for debt mutualisation and grants through the European Union Recovery Fund, has really benefited the euro. Strong breakout, breaking the downtrend, breaking through the 1775 level of resistance. That is a key moment because that was the first real lower reaction high, which now changes the complexion of this outlook completely. That now takes us into an uptrending phase. So instead of lower highs and lower lows, we're now building on higher lows and higher highs. So you'd be looking to buy into any sort of corrective slip. The momentum indicators are strong. 60 on RSI is the highest since January. MACD lines accelerating, stochastics accelerating higher. Ideally, you'd be looking for a buy zone, I think, between 117 and 117.75. 116.50 thereabouts, an old level which sort of been supportive previously. And that is around about not too far off where that uptrend comes in now. So, but around that 17 mark would be 1770 to 17 figure to 1775 would be a decent entry point. You can see here on the hourly chart, decent configuration now, with breakouts and support finding at higher levels, and you'd be looking to buy into weakness, certainly I think, on euro yen now. Certainly if the euro continues to recover and broad market risk appetite remains on an improving trajectory. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars, and you can click to also watch our Trader Talks videos to gain some top trading ideas.